My single most requested video to make ever, my updated stock market portfolio. What is happening, investors? It is your boy Jack. I am not a financial advisor. I got the clothing line to prove that fact, and today I'm going to show you 100% of my stock market portfolio. Just recently we broke the $100,000 mark, which to me is absolutely insane. I know here it says 82,996 euro. You will see that in dollars that is just over $100,000. I just want to give you guys a little bit of backdrop. Okay, the last time I made a video like this was the 1st of June, where I had about $7,000 in the market. And a little bit more backdrop, I actually started investing on the 28th of February, I believe. And you will see that my very first day in the market, I lost about 8%. I'm sure a lot of you guys will remember this was right in the middle of the crash. I thought it would be a good time to get started. You will also see my first month in the stock market, I was down nearly 25%. So it's been a journey to say the absolute least. But this here is my portfolio, just over $100,000 in there. You'll see our return is at about 52%. I know that may seem low to a lot of people, but keep in mind that I'm constantly investing into this. A month ago I only had 36,000 invested, so over $20,000 I put in this month. And obviously the more you invest, the lower your percentage returns come down. But for my first year in the market, I'm very, very happy. Because when I started investing, okay, I probably had $15,000 to my name. I was at a job where I was making probably about $20,000 a year. So to have in my first year built a portfolio that's worth $100,000 as of this moment in time, and make what it would have taken me about a year and a half to make on my last job, I'm pretty happy. This is one thing I don't speak about all that often. I like sharing my portfolio. I mean, I like sharing my buy and sells, etc, etc. I just don't want people to blindly copy me, in all honesty, because I'm very open about it on the channel. You know, I am relatively a high risk investor. I have high risk potential, you know. I don't really care if I lose money. I'm going to make more money. I'm very young. Thankfully, I'm obviously not losing money. I'm making considerable amounts. I'm still a small player in the grand scheme of things. But yeah, today I'm going to bring you through everything. So there is 26 stocks in my portfolio as of right now. I'm going to bring you through every one of them, how they've performed up until this date, my thoughts on them very briefly, and we're just going to have a chat, my friends. But right before we do that, can I please ask you to hit that juicy like button? I mean, this video has been a long time coming. Please drop me a comment down below. Let me know if you were here for my first portfolio video where we had $7,000 in the market. And if you weren't, let me know when you subscribed to this channel. How many subs did I have when you subscribed? And please, my friend, if you are indeed new around here, hit that juicy red subscribe button. We're trying to get to 100,000 subs. A sub for every dollar in the market, baby. Also, if you are interested in joining my private Discord group, in there you get access to all of my buy and sell alerts, access to over 50 private channels, join a community of over 2,300 investors. But do be aware they charge the first every month, so I advise that you don't sign up this weekend. Wait until the first, or else you're going to get charged twice. And if you want 4 free stocks on Webull, that's the second link in the description, my friends. You gotta sign up, deposit $100, you get some free money. So we're gonna go through it in alphabetical order, just to keep the suspense building. So the very first company is Alphabet, okay, Google. So you'll see I don't have a very big position in these guys at all. We have 0.7 shares. That equates to just over 1,050 euro. You can see we're up about 23.6%, but with the FX impact, that actually taken away 6%. That's the joys of investing in an account that is in euro, not dollars, but hey, it is what it is. Now you'll see I don't have very much money in them, literally just over 1% of my portfolio. But I'm not willing to sell them because I still do like the FANG stocks that I have, and we'll speak about most of them in today's video. I just don't ever see myself putting loads and loads of money into them. When it comes to big tech, I think all of these guys have potential and they're very safe bets. I think of them as easy money stocks, but I don't think any of them are going to give huge returns. I think there's much better options in the market. But that's the first one. That's Google, my friends. Second up, we have another FANG. We have Amazon, and you see I have a similar amount of money in them. Gain at 14.62%, FX impact minus 7.68%. It's 0.35 of a share. I have oftentimes thought about bringing this up to a full share, and at the current price of $2,700, I am heavily contemplating doing so. I know in my portfolio, 1 share of Amazon's still not the biggest amount, which is insane to be saying, because again, 7 months ago I remember speaking about Amazon and thinking maybe one day I'll get up to a full share, because I was buying it at like 0.005 or 0.01 a share at a time. It's crazy how times can change. But Amazon, the same thoughts as Google. You know, I think they're going to do well. I think they're going to be relatively easy money, but I don't think they're going to make the most money. And you know, I am really chasing growth very quickly right now, so I go for the higher risk, higher reward plays in general. That's what I'll see most of my money, and you're going to see that in today's video. Now we have Apple, who yeah, I like these guys. I was buying them just below $100 a share. You can see we have 15 shares in them, up 31%, but the FX impact again is negative about 6%. I really like Apple. I do think out of all the FANG stocks, Apple and Facebook are more than likely my joint favorites, but Facebook hasn't been performing well at all. Apple is one that I more than likely will buy more of at some day, but again, right now at this moment in time, it doesn't offer me the same growth potential as a lot of other plays, and that really is what I'm focused on as a 23-year-old who's making good money, who wants to make a lot of money in the market. It's fine having a little bit of money in there, but it's never going to have too much. Okay, so our first company with a decent bit of money is Biola, and I've made a couple of videos on these guys as of late. So obviously they're a penny stock. You'll see I have 5,000 shares in them. I bought that at $1.02 a share, so just over $5,000 in the company. You will see that we're up about 8.8% altogether. This time the FX impact is in our favor. Now this one, I'm not going to say it is a long term investment, but it's not a swing trade either. I could well see myself holding on to these guys for at least a couple of months. Now obviously if things go absolutely crazy, I will sell them and I'll run away with my profits. Some of you guys may remember we recently hit 150, so I would have been up 50-ish%. I didn't sell anything there. I think these guys have much more potential than that. I think I can make a lot more money out of them. But again, if you want the information on any of the companies we cover today, I'm going to have full videos on most of them. But technical analysis wise on these, they look ready for a breakout. There's just a couple of things we're waiting for. But this here, this is, you know, my shorter term money. A lot of my stocks like Google, Amazon, Apple, I don't have to even ever think about them again, you know. I could leave that money there for 20 years, I'll never have to look at it as fine. This money I have in them, you know, it's not really going to be left there for 5-10 years. Okay, next up, what is actually my current biggest holding, okay, we have shll Capital 4, the company that is rumoured to, you know, be taking Lucid Motors public. So thankfully I got into these guys nice and early on. We're currently up at about 78% in the green. I have 500 shares. Yeah, we have just over $10,000 in there. So again, this is one where I didn't sell when we made our highs, and I was up nice money, you know, we made some really quick money in here. But it is one where I genuinely think that, you know, if things go the way we want them to, I could be looking at making 10, 15, even $20,000 on this initial investment that was about €5,000. And my risk is very controlled at less than $1,500. So I mean, I'm willing to just let it ride. Again, if things go wrong and I end up getting too greedy, it is what it is. There's always going to be more opportunities in the market, my friends. But that's my biggest investment right now because it's gone up so quickly, so fast. I put a considerable amount into them at the start. It's happy days. Okay, next up we have CCIG. So this is a SPAC that's to bring a rival public, my friends. You might remember that I interviewed the president of that company on this channel before. Now you will see that sadly I didn't put very much money into this company at all. I only got 100 shares at $13.11. We're up about 100% in this company. The day after I invested, we shot up really quickly. I think it was like a 70 or 80% day. So I didn't get time to build my position. It happens, you know, you win some, you lose some, sometimes you get to build your position, sometimes it runs away from you. It was quite sad at the time because I was hoping to put a considerable amount of money in, similar to what I was hoping to do with shll Capital 4. It happens, lessons learned, be willing to take the added risk sometimes if you have high conviction, and that's exactly what I went ahead and did with shll Capital 4. So even though I didn't get to build a position in these guys, we're still up about 100%, but it did lead to me going a little bit heavier on CCIV. And I think that really is the most important thing in the stock market game, is just learning your lessons and applying it in the future. Okay, so now we have Corsair Gaming, okay, one that I probably added like a month or so ago. It's 75 shares at 36.35 a share. It's a decent position, not my biggest in the world. I still like them at this price. Again, these are a long-term play for me. I could see myself having these guys in the portfolio in 5+ years down the line. Now, obviously, there's no guarantees. I could end up selling them in a year or two for whatever reason. But if they keep doing the things they have been doing, I'm going to hold them. This is just simply put, you know, a growth stock. Doesn't need too much monitoring despite the volatility. It's fine. I'm chill with whatever they do. Then we have Desktop Metal. And again, one that sadly I didn't get to build a position in. So again, you'll see we're up, what, 93%? Close to 100% without the FX impact. And again, it was just one where I didn't have as much money at the time, so I couldn't invest as much money at the time, but I did plan on getting more into these guys. It is what it is. Again, lessons learned. I learned a lot of lessons in my first year of investing, and that's why I'm really excited for this year in particular. I want to make a lot of money in the market this year. And that's the plan, baby. Everybody in the Discord knows that. We went hard in January. We made a few really nice trades. I want to make money this year. So all of the lessons that I learned last year will come into next year with me. We're going to take advantage, baby. Now, Facebook. This is a weird one, okay? It's actually in the red now. You can see that is due to a 6% loss on FX impact. We would actually be up a little bit if it wasn't for that, but still nothing really. So this is one that I actually initially bought. I think it was in the low 100s, but I did dollar cost average up. And again, I was buying these guys when I didn't have much money. So I know I have, what, €1,200, maybe $1,500 in there. Which to me now is, yeah, I wouldn't really think too hard about throwing $15 at anything. But back then, this was actually one of my biggest positions. I think there was a stage where it was my biggest position. I still think Facebook is just easy money. I don't care if it's in the red for 1% right now. I think over the span of a few years, it's easy money. I don't necessarily think it has the same potential as Apple or even potentially Amazon, but I think the odds of it giving a decent return and beating the S&P, etc. is quite high. So this is actually one that I'm considering putting some more money into now, because I just think it's easy money, and I still have quite a bit of cash on the side. Okay, next up we have Foley Trasimene Acquisition, BFT. So a SPAC that a lot of you guys will be aware of. You'll see we're up about 21% in the company. We've been up considerably more. They had a really bad pullback. I was up over 50% in these guys, I do believe. But again, this is one where, you know, I have enough money in them where if they do really, really well, I'll make some decent profits, but if things go really poorly, I'm going to be absolutely fine. This is one who I was considering buying more of over the last 2 days since the recent pullbacks. And I still am. I did open one new position just yesterday, which we will get to. But this is one of the companies that I like more than a lot of other things in the market at current prices. Of course, I will update the Patreon if I do buy more. Now, my second worst performing company we have is Hyliion. Now, thankfully, you will see it's a tiny, tiny position. So, I mean, I always thought that these guys were very high risk, and a lot of people didn't agree with me. I know I put some big price targets on them. They actually did hit the majority of my price targets, but they obviously fell very, very quickly. So I'm down about 20% in them without the FX impact. Why am I not selling them? Because I just kind of like keeping up to date with them, and I do genuinely believe that over the next 12 to 18 months or so, they're going to do good things. Why am I not investing in them? Because I don't think they're going to do the best things. I think there's a lot better opportunities out there. But this one again was a lesson to me. It showed me what hype could do. It showed me what market sentiment could do. It could bring a stock up very quickly, but it could also bring a stock down very quickly. And it taught me that, you know, you don't always have to be greedy. You know, it hit one of my price targets and I didn't sell a single share. I probably should have, but it is what it is. Thankfully, it was a very small investment from me. So we're down just over $200 there. Okay, one of my favorites and one of my biggest investments, LORDSTOWN Motors. You can see we have 300 shares at $16.44. We are up about 48%, just over 50% excluding FX impact. So again, I've been up more in these guys. Like very recently, you may well remember we just hit just under $30 a share. But I've been saying for a long time on the channel, I see these guys as a very long-term investment. There are some EV plays out there that I think could end up being, you know, sold within 6 months, a year, maybe a year and a half. I think I'm going to have LORDSTOWN Motors in my portfolio for a very, very long time. I have a lot of confidence in this company. I'm not really worried about the short-term moves. I wouldn't even be worried if I went red in these guys, in all honesty. They are that kind of company. They're very volatile. You could well swing them and make 10-20% very easily on numerous different occasions. They respect technicals a lot of the time. They have big moves to the upside and to the downside. I have no interest in that. I'm just going to hold these guys for a long, long time, and I believe they're going to give me huge returns over the years to come. I genuinely believe these will be one of my best performance stocks in 3 or 4 years. So just another one in Microsoft, another big tech play that I don't really have much money in. You'll see it's about $1,000. We're up about 16%, but with the FX impact, we're actually only up about 9%. I don't think too much needs to be said here, in all honesty. It's Microsoft. Okay, my single worst performing stock that there is, a lot of you guys will be aware of these guys, Multiplan. So I had 150 shares at $11.35. So it wasn't exactly a tiny position, but it wasn't a big position by any means, thankfully. You will see that I am actually down 31% in the company, nearly 30% even without the FX impact. My worst performing company by far. And I am down about $500 in them, so, you know, $500 at the end of the day, meh, it's fine. The likes of CCIG have covered these guys 10, 11 times over already. And again, it's one where I don't plan on buying more yet, but I'm not selling them because I genuinely believe they're going to be green. Now, it may take a few months, it may take a year, but I don't need that money. I'm not strapped for that €986 that's sitting in the account, so I'm happy to just leave it there. And again, if it goes all the way to zero, which, let's be honest, the likelihood is very low, I'm not going to lose any sleep over that lost money anyway. Just keep in mind, guys, that's the kind of investor I am. I mean, nearly any position in my portfolio could go bankrupt tomorrow and I'm going to be okay. That is why I also do like the diversification aspect. I know I have a lot of my money in tech, in growth. I have some in penny stocks now, some in biopharma, a lot in EV. There still is some decent diversification in there. Next up, we have NEO. I think this is my best performance stock, but sadly, I wasn't in very big on them. So again, This is one who I didn't invest heavily in for two primary reasons. One was because I didn't have much money when I was buying the majority of my shares, yet again a common theme. And I'm sure that when I look back on this video in another 12 months, I'm going to look back at CCIG, who I put €5,000 into, and be like, I didn't have much money. Things change quickly. But the other reason was because I didn't want too much exposure to the Chinese markets in general. So you can see we're up nearly 300% in this company, and obviously they're coming off the back of a little bit of a dip as well. It's Neo. Again, no intentions of selling these guys. I still think, even with my small investment, I mean, what, we had less than €1,000 in them initially. I still think we're going to see some really nice returns off these guys in the next 2 or 3 years. Now we have Palantir, so again, it's an alright position. It's not very big. We're up about 60%. We have 100 shares. Average price is $21.72. I initially bought these guys in the 15s, and then I bought more. I think it might have been in the 26s or 27s. And I'm still actually contemplating adding another 50 to 100 shares, even at these prices, even after I'm already up. Now, the reason I'm not is because I do think that short-term Palantir has room to go down. I think we are trading at a decent premium. It depends on how well our next earnings go. It depends on what happens when the lockup period ends. I'm not in a rush to buy more Palantir, I'm going to put it that way. But I do think there will be a stage over the next 2 to 3 months where I have more than 100 shares in the company. I'll put it that way. Qualcomm, to be honest, I don't know why I'm still holding these guys. You'll see it's a tiny position. We're up 62%, 70% before the FX impact. I have 3 shares. I mean, I don't know why I haven't sold them. I kind of just like keeping up to date with them. But again, this is one I bought when I had no money really. I'm just happy to leave them sitting there. Again, I don't need the money. I don't really need to put that into anything else. So I'll just leave it there. And again, the reason I haven't sold to an extent is because I could genuinely see myself investing in these guys in the future. So even if I am to, you know, invest heavily and maybe I'm going to buy 100 plus shares, why not just have the extra 3 there? So now we have Stable Road Acquisition Corp, okay? The SPAC who is to be merging with Momentus. And I've said on the channel before, I think this is the longest of long-term holds. I could see myself holding this company for 10, 20, 30 years. I don't really see any reason I'm going to sell these in the future unless something goes wrong. So as long as things go right, I'm just going to be holding them for a long time. But again, you'll see we're up nearly 80% in these guys, 80% without the FX impact. 250 shares at $11.46 a share. So considering it's a SPAC, our risk is still extraordinarily low. But obviously once the merger goes through, anything could happen. But again, zero intentions of selling this company. I want to hold these guys for literal decades. Some news did come out recently in regards to a new CEO. I will be having a full video coming out on that soon. Okay, Switchback Energy. These guys have been a journey. So you'll see, obviously, again, we've done well with these guys. We're up about 158%, just over 160 without the FX. I have 150 shares at $14.34. So again, this is an example of where, you know, you don't need a really big position to get really nice returns. We're up 158%. I was up over 200% in them as well. You'll see that they did make highs of 46 a share. These guys, again, very volatile. They are my favourite play on EV chargers. They're my single favourite one. That's why I have zero intentions of selling any of them. With that being said, I also don't have any intention of buying them at these prices. I think you're paying quite considerable premiums, but I think you're doing that for a lot of the EV chargers right now. If I didn't have any sort of a position, I might be willing to start one on dollar cost average slowly. But for me, I have no intentions of adding to these ones, but also no intentions of selling. And I do think these are going to do really well over the next, again, 2 to 3 years in particular. Okay, so this is actually the newest addition to my portfolio. It's Tattooed Chef. I think I bought these guys on Thursday. It was either Thursday or Friday. We're down about 2% so far. I'm in them a day or two. Who can really care? These are a long-term investment to me. Okay, so I watched these guys for a long time. And I put off investing in them for a long time. And I'm not really sure why, because I really like the company. And again, I'm going to have a full video on this company soon. This 150 share investment at $23.59. I would actually call it my starter position. I don't think I'm done investing in this company yet. What I will say is that the price action has been a little bit weird as of late, okay? And I think a big-ish move could happen either direction. But these guys have been strong-ish over the last while in comparison to a lot of the market. And I think, again, it's a really fast-growing industry. I wanted some sort of exposure to it. I could well see myself doubling that position potentially over the next few months. We'll see. There's no guarantees. Okay, we have Tesla. So again, I don't have very much money in Tesla. I have 6 shares at $344 a share. So we're up about 120%-ish. I remember when I initially bought these guys, people told me I was crazy. I think it was right around here. I bought at all-time highs. They went on a big dip and I got so much hate for it. But I mean, we're up 120%. We've obviously been up more than that as well. Everybody will know that Tesla took a considerable dip. One thing I want to say about Tesla is I have constantly kicked myself for not buying more of it. It's one where for so long I've been waiting for a huge pullback to buy more, and I mean really buy more, and that pullback never comes. So Tesla's taught me a lesson that I might not get to implement for a while, but if ever there's a company that comes around like Tesla, that disrupts its industry like Tesla, that is truly the leader, I'm just going to be buying them. I'm not going to worry about if I feel like I'm paying too much. Now, with that being said, I could still buy more Tesla at this price. I have a tiny position, sadly. It is what it is. It's still performing very well for us. Okay, so this one here, Titan Medical. I've spoken about these guys a couple of times on the channel as of late. It's another penny stock. You can see they were at $2.08 a share when I bought them, and I bought 3,000 shares. So we're up about 20% right now. You can see we have been up much more. These guys did break up above $3 on a couple of occasions, but they've been very volatile. So again, this is one where, yeah, I do have a decent bit of exposure to these guys, and I fully accept the fact that I'm taking a considerable risk here, and I could lose a considerable portion of my investment in all honesty. Now again, it's a penny stock, but it's not one where I was in it for the swing trade or the day trade. I was up over 50% in them. Again, that was some nice money. I didn't sell. I think these guys have big potential, and a big catalyst could lead to a huge move for them. Now again, I wouldn't let these guys go to zero. I'm not silly. If we were to dip towards the 150-ish marker, so, you know, I'd call it a day, I'd take my loss and move on with my life, go on towards the next play. Okay, we have VG acquisition. Now this is an interesting one. So I have 300 shares at 10.62. So the thing to understand here is I bought these guys before we knew who they were going to be merging with, and it was essentially just a place to leave my cash. It was very risk-free. I was risking 62 cents a share. Literally risking a couple $100, and I had the potential to make, you know, a few thousand at least. So we're up 20%. We finally do have a merger target. Again, there will be a video coming out in regards to that relatively soon. I don't really plan on selling yet, but again, I'm not married to this stock. This is one that could be in my portfolio for a long term, or it could be sold next week after I do my research into the company we're merging with. I'll keep you guys updated on this one. I know a lot of people have questions, but yeah, that's them. It was just a place to leave some cash, really. Instead of leaving it in the bank where it does nothing, I took a very small risk for, you know, potential high rewards. And then after VG acquisition, we actually have Virgin Galactic. So 150 shares, average price of 17.42. I did buy most of my shares below 15 and 17, but then I also did one decent order in the 20s, so that brought the average price up considerably. A lot of you guys are probably aware of the pretty insane price action we have seen as of late. So I'm up a total of 144%, close to 150% without the FX effect. I think these guys are in for a crazy one. You guys all probably know what's going on with Wall Street bets right now, all of the short squeezes. Virgin Galactic has a very high short percentage float, so I could benefit from the next short squeeze unintentionally. I was investing in these guys as a company. We're already up 150-ish%. If there is to be a short squeeze, I mean, I love these guys. I want to hold them for a long time. But if something like what happened with GameStop happens here, I mean, of course I'm going to sell. If not, I will hold them, and I won't be upset if they come all the way back down to $25 a share. Again, this is one where I have a long-term outlook. There's a lot, and I mean a lot of upcoming catalysts over the next 4 to 5 months, hopefully. It's Virgin Galactic, baby. One of my bigger positions now after this recent very large run-up. Okay, another company I have a tiny position in. It's Walt Disney. You'll see I have 2.5 shares, average price less than $100. We're up over 50%, and I'm over 63% without the FX impact. Again, you may ask, why don't I just sell them? I mean, the money here doesn't really matter. It's nothing considerable. I don't need that money. And again, Disney, as far as dividend stock goes, I like to keep them there, okay? And here's why. I still plan on, you know, having a lot of money in dividend stocks when I have a lot more money. I mean, when I'm a multi-millionaire, that's when I really want to get into these dividend stocks. I know a lot of people use dividend stocks as a means to retire, but I want to just really get into them when I plan on retiring. So that's why I'm using growth stocks right now in order to build up all of this money. And then the main plan to do with all of that money is to get it into property and dividends, so that I don't have to actively monitor and actively manage a high-risk, highly volatile portfolio for my entire life, because that's not very sustainable. So I keep Disney there just as a reminder. You know, every time I look at my portfolio, I see them, and I just remind myself that, you know, one day I'm going to be in companies like this. And also as a reminder that if you buy the right ones, they can go up in price massively. I mean, 53% on a dividend stock, you cash them at the right time, you take advantage, you can actually make a lot of money and not just rely on those dividends. And, you know, a 6, 7, 8% return a year on average. So that's why Disney stays there. I don't really care what it does. I just like it as a reminder. Okay, and then obviously we have my final company. Everybody knew this one was coming. It's Workhorse. Okay, it's my second biggest position now because CCIG went up so quickly. 300 shares, average price of $19.20. Look, you guys will see I don't have the best cost basis here whatsoever. I bought a lot of shares in the 23s and the 24s. I was initially buying them in the 15s. And let me tell you, my friends, I built this position again when I didn't have much money. So now for me to put 5,000 or so into a company, it's not the biggest deal in the world. But back then, to me, it was a lot of money. And you can see that I have been raiding these guys over the last 3 months. Now I'm up 72%. I mean, this is Workhorse. This is what they do. They're incredibly volatile. Again, they do have quite a high share percentage of their float outstanding, so we could see a squeeze of sorts. But again, like LORDSTOWN Motors, I think these guys will do incredibly over the years to come. I think the next quarter or two could be shaky, as the last couple have been, but I'm willing to hold through them. Obviously, we're waiting for the USPS contract. If we get that, it's going to be happy days. But if not, I still think this is going to be an absolutely incredible company. So as of right now, we're up 72%. It's nothing insane, I know, but they've treated me well so far. But my friends, that is my full portfolio. It's pretty insane to think that there's $100,000 sitting in my portfolio when, again, this time last year I probably had $15,000 to my name. It's also insane to think that in my portfolio alone this year I made what it would have taken me a year and a half to make before. So I do hope that you guys enjoyed this. Don't get used to them. I'm not going to be making them every month, but you know, maybe every 6 months or so we will do an update. Again, I know I'm not the best investor in the world by any means, but I'm trying to get better and better. We've done well so far this year. We've done over the past year, we've done decently. But if you have watched this video till the end, it was probably a long one. I want to let you know you are so appreciated, and you, my friend, are a true legend. I really do appreciate you being here. If you enjoyed today's video, could I please ask you to hit that juicy like button, drop me a comment down below, and please, my friend, subscribe if you're new around here. Also, if you are interested in that private Discord group, it is the first link in the description, my friends. You do get access to every one of my buy and sell alerts, access to over 50 private channels. I'm going to be spending so much time in there next month. We've over 2,300 members in there, but wait until the 1st to sign up because Patreon charges on the 1st. And if you want those free stocks on Webull, that's the second link, my friends. Anyway, guys, I hope you all have a beautiful, blessed day. I'll see you for another video soon. Peace.